You're listening to the Financial Source podcast on YouTube.
You know, usually when I look at the markets, I can kind of get a read on the mood, happy, sad, maybe just bored. But right now, it feels like the global economy is having a massive identity crisis. We've got companies making money, people getting hired, which, that should be a party. But instead, everyone is just sort of looking over their shoulder at the politicians and central bankers waiting for the other shoe to drop.
It's a classic tug of war, absolutely. On one end of the rope, you have that hard data earnings, jobs, the real stuff. And on the other end, you just have pure anxiety about what might happen. We have a huge stack of sources today, everything from Asian stock splits to U.S. job numbers, and even some pretty concerning intel on North Korean submarines.
Wow. Okay.
But the mission here isn't just to list it all off. It's to figure out why good news is suddenly starting to feel like bad news.
Let's start with that confusion in Asia then. I was looking at the numbers from Australia, and the ASX 200 is actually up. You've got big names, Origin Energy, ANZ Group. You're posting wins. So if I'm an investor down under, shouldn't I be, popping the champagne?
You might want to keep the cork in the bottle for just a minute. Yes, the corporate earnings are solid, but there's a hawk in the room. Specifically, RBA Governor Michelle Bullock.
Okay, hold on. When you say hawk, we're not talking about bird watching here.
Right, sorry. In central banking terms, being hawkish means you are aggressive about raising interest rates to fight inflation. Bullock is basically warning that even though companies are doing well, if inflation sticks around, she is not afraid to hike rates again.
And that just pours cold water on everything.
It acts like a wet blanket on the whole market because higher rates make borrowing expensive for literally everyone.
Which brings us to Japan. I mean, talk about a roller coaster. The Nikkei 225 hits this historic high, over 58,000, which sounds insane, and then immediately nosedives. What happened there?
The currency happened. The yen strengthened pretty significantly. It was trading below 153 against the dollar.
I always get tripped up on this. Why is a strong currency a bad thing for the Japanese stock market?
Well, think about it from the perspective of a giant Japanese exporter, a car company, an electronics giant. If the yen is strong, their products suddenly become more expensive for Americans or Europeans to buy.
Right.
And that hurts their sales abroad, which then drags down their stock price. It's a real double-edged sword.
It really seems like every region has its own specific headache. China looks all over the place, too. Hong Kong is down because companies like Budweiser and NetEase missed their earnings, but Shanghai is moving up.
Shanghai is being propped up by the government. They're injecting cash, pushing hard for AI adoption, which gets investors excited. But there's also this whisper of hope regarding the U.S. There's some speculation that Presidents Trump and Xi might extend their trade truce.
Okay, so that brings us stateside. Speaking of Trump and trade, we have to talk about the U.S. jobs report. The non-farm payrolls came in hotter than expected. More people have jobs. Again, this sounds like great news.
And this is where that market psychology just gets so twisted. In this specific environment, good news is bad news.
Explain that to me.
If the job market is too hot, it means people have money to spend. If people are spending money, inflation stays high. And if inflation stays high, the Federal Reserve, the U.S. central bank, is not going to cut interest rates. Traders were betting on a rate cut in June, but after this report, they've pushed that expectation back to July.
So the market is throwing a tantrum because the economy is, too healthy?
Pretty much. They want the economy to cool down just enough to get cheaper money.
But if the U.S. economy is so strong, why didn't the U.S. dollar spike? Usually high rates mean a strong dollar.
It should have, but politics is weighing it down. There are reports that Trump might rethink the North American Trade Pact. That introduces so much structural uncertainty, and investors hate uncertainty even more than they love high rates, so it acts like an anchor on the dollar.
And if we want to talk about uncertainty, we have to look at the geopolitical stack. This report about North Korea building a submarine for 10 ballistic missiles just feels like it belongs in a movie script, not a market briefing.
It is alarming, but the really interesting detail is the Russia connection. North Korea is reportedly cooperating with Russia on this program. However, Russia is specifically excluding nuclear and advanced technology transfers.
Wait, so Russia's helping them, but not not all the way.
Exactly. It reveals a fascinating strategic insight. Russia needs North Korea's support and, frankly, their labor right now, but they seem to be terrified of creating a neighbor that's too powerful. They're walking a tightrope.
That tension is everywhere. I saw gold hit a wall recently, too.
Yeah, we call that hitting resistance. It got near $5,100 an ounce, which is a price where sellers just historically jump in. It retreated because of those delayed Fed rate cuts we mentioned. Gold loves low interest rates, so when the Fed waits, gold waits.
It feels like everything is in a holding pattern. Oil is stuck between the Pentagon prepping for conflict and Trump saying he wants to negotiate with Iran. Stocks are stuck between good earnings and scary central bankers.
That's the perfect summary. The fundamentals, the actual business of making money, are quite strong. But the conviction is missing. Everyone is just waiting for the political dust to settle.
So here's the big question I think we should leave you with today. With markets reacting so violently to every political rumor or trade whisper, are investors actually looking at the economic reality anymore? Or is the entire global market just placing bets on the next headline?
I think we all know the answer, but it's a scary one to admit out loud.
Thanks for diving in with us. We'll catch you on the next one.